Hey everyone! Welcome back to Keys to Cash Flow, where we unlock the best strategies for real estate success and financial freedom. If you're tired of the risky, fast-paced world of house flipping, then listen up, because today, I'm breaking down why the slow flip strategy is the ultimate real estate hack. Loudspeaker. This method lets you build wealth, enjoy cash flow, and increase your net worth, all while avoiding the stress of traditional house flipping. So, if you're looking for a low-risk, high-reward real estate strategy, you're in the right place. Stick around, because I'll also share a step-by-step guide on how you can start using this strategy today. Bell. But before we dive in, do me a quick favor. Hit that like button and subscribe so you never miss out on real estate investing tips that will help you scale your cash flow and build wealth. So, let's start with the basics. What exactly is the slow flip strategy? And how is it different from traditional house flipping? Hammer and wrench traditional flipping means you buy a house, renovate it as quickly as possible, and sell it for a profit, usually within 6 months to a year. Sounds great, right? But here's the problem. Cross-market's risky. If the market shifts or your renovation costs skyrocket, you could lose money. Cross-market's stressful. You're constantly on deadlines and dealing with contractors. Cross-market's competitive. Everyone wants a quick flip, which drives up prices. House with garden now, enter the slow flip strategy. Instead of rushing to flip the house, you take a more strategic approach. Heavy check mark, you buy the property at a discount. Heavy check mark, you hold on to it for 3 to 5 years. Heavy check mark, you rent it out to cover expenses and build cash flow. Heavy check mark, you let market appreciation increase its value. Heavy check mark, then, you sell for a bigger profit than a fast flip, without major renovations. Rocket. This strategy is perfect for investors who want to make money in real estate without flipping houses like a reality TV show contestant. So, why is the slow flip strategy such a game changer? The answer is simple. Time does the heavy lifting for you. Chart increasing, cut to graphics. Benefits of slow flipping. White heavy check mark, less renovation work. You don't need to gut the house. Just make it livable and rent it out. White heavy check mark, steady rental income. Your tenants cover the mortgage while the house appreciates. White heavy check mark, bigger long-term profits. Instead of flipping in 6 months, you sell in 3 to 5 years when the value has risen significantly. White heavy check mark, tax benefits. Holding for more than a year means you might qualify for lower capital gains taxes. Bar chart, cut to example. Simple deal breakdown. Let's say you buy a house for $100,000 that needs minimal repairs. You rent it out for $1,200 per month, covering the mortgage and making a little extra each month. Over 3 years, the market appreciates, and now your house is worth $160,000. Money bag. Now, when you sell, you've not only made rental income, but you're also walking away with a $60,000 profit. And guess what? You didn't have to stress over a rushed renovation. Direct hit. Alright, now that you see why the slow flip strategy is a game changer, let's break down exactly how you can start using this method today. Step 1. Find the right property. Magnifying glass tilted left, look for properties that are heavy check mark, below market value, foreclosures, motivated sellers, off-market deals. Heavy check mark, in areas with strong appreciation potential. Heavy check mark, livable or needing only minor repairs. Light bulb pro tip, search for seller finance deals or subject to properties to minimize upfront cash investment. Step 2. Finance it the smart way. Bank, consider these financing options. White heavy check mark, seller financing, low or no down payment. White heavy check mark, private or hard money lenders. White heavy check mark, traditional mortgage with low interest. Light bulb pro tip, aim for a low mortgage payment so your rental income easily covers it. Step 3. Rent it out for cash flow. House, find reliable tenants and generate steady rental income. Your goal is to cover all property expenses and pocket some extra cash each month. Light bulb pro tip, use property management if you don't want to deal with tenants directly. Step 4. Let the market work for you. Chart increasing while you rent the property. Appreciation does its magic. The longer you hold, the more the value increases. Step 5. Sell at the right time. Money mouth face after 3 to 5 years, sell the property when the market is at its peak. Walk away with big profits, without the headache of fast flipping. Police car like. Even though this strategy is simple, some investors make mistakes. Here's what not to do. Cross-mark buying in low appreciation areas. Pick locations with steady growth. Cross-mark underestimating holding costs. Factor in taxes, insurance, and maintenance. Cross-mark ignoring property management. If you're not managing it yourself, get a good team. Light bulb. Avoid these mistakes, and your slow flip will be smooth and profitable. Studio microphone. So, why are more investors switching to the slow flip strategy? Simple. It's a low-risk, high-reward way to build long-term wealth. Bar chart. Let's recap. Why heavy checkmark? You get rental income while waiting for appreciation. Why heavy checkmark? You avoid the stress of fast flipping. Why heavy checkmark? You benefit from long-term